Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special conversation. Our focus will be on PNB Housing Finance that's reported its stellar numbers, and the stock is also seen an upper circuit today post the earnings as well. We'll be speaking to the management of the company, but just before that, let me highlight for all our viewers the key numbers that have come in. The net interest income has increased by 19.2% from last year for the company, while the net profit has also gone up by 28%, nearly to 567 odd crore rupees. Remember, the bottom line has been aided by a provision write back of 64.85 crores as well. The asset quality of the company has also improved on a sequential basis. We've seen gross NPA improve to 1.08%, and we've also seen the net NPA now stand at 0.69%, better than 0.8% that we saw last quarter as well. In fact, the assets under management have also crossed a mark of 80,000 crores, rising 13% on a YOY basis and 4.5% on a sequential basis as well. So let's get in our conversation with our top management today. We have Mr. Girish Kousgi joining in, the MD and the CEO of PNB Housing Finance. Warm welcome, sir. Thank you so much for taking the time out for Business Today Television. On your quarterlies, many congratulations. Another strong quarter that you've posted. It's been a steady growth for you all across FY25. Do help us understand how have you analyzed this quarter? Has it met your expectations on all the parameters? And, what is the outlook that you have for FY26 as we stand at the new fiscal year, sir, now?
Well, thank you so much, Sakshi. I think we had a great FY25 and quarter four. We had a lot of milestones, which we were able to realize. So, number one, we had guided affordable book of 5,000 crores because affordable book is a new business started 27 months back in Jan 2023. In about 27 months, we have crossed book of 5,000 crores. So, the guidance was by March 25. 5,000 crores. Today the book is 5,070 crores. Number two, retail growth we had guided 17%. We have done 18.2%. Number three, margins are stable, NIM is stable. Actually, it's around 3.6, 3.7 consistently for last few quarters. And there's a good growth in PAT as well. AUM crossed 80,000 crores. Retail book is close to 75,000 crores. Overall loan book is 75,765 crores. I think overall it's been a fantastic year, fantastic quarter. And we saw all-time high disbursements ever in the history of PNB Housing on the retail side.
Okay. Sir, let's talk about each of the specifics to help our viewers really understand a little bit better. First up, if you could just, before we come down to each of the parameters there to discuss on all the parameters, but how is the demand looking like at this point in time? FY26 has started off. We have seen 2 rate cuts from the RBI as well. So how's the demand really looking? We've seen how luxury segment has been outperforming, but is it also picking up pace now in the affordable segment now with the new rate cut regime, sir?
Absolutely. Even in FY25, I think affordable business saw very good demand. Demand was pretty good in FY25 as well. All the segments, I think, more so in affordable and emerging. In spite of lot of challenges, I think industry will still do well in FY25. And FY26 is going to be far better than FY25 because all the challenges what we saw in FY25 are not going to be there in FY26. So the demand will be quite robust. Policy rate cut couple of times would aid growth. It would definitely increase demand. So we are expecting FY26 to be far, far better and superior compared to FY25 at the company level and also at the industry level.
Okay, got that. So that's the view. Now let's come down to some specifics, sir. I want to first ask you on, your loan growth, especially in the retail segment, where, you have been talking about your guidance as well. Have you achieved all that you had set for FY25? Is it on track, for your FY27 targets that you had shared with us earlier as well? And what do we expect from the retail segment, sir, especially which you focused on last time? You told me about affordable and emerging is what your core area is. So how is that coming along, sir?
Yeah, so in FY25, the guidance on retail loan growth was 17%. We did
Yes.
18.2. Obviously, we've surpassed our target.
Okay.
If we look at segments, Prime, we have grown the book by 12%. This is more by design. We want to grow Prime book slower because of margin constraints. Emerging is a new business, upcoming business. So emerging, the growth is 21% on book. And affordable, the growth is 183% on book. So I think fantastically, retail book has grown. Affordable and emerging, the focus is more, and therefore the growth rates are much higher there. Now, we had guided by March 27 retail book to cross 1 lakh crore. Today, the retail book is about 74,800 crores. Now, this will go to 1 lakh crore in next 2 years. And the mix is going to be like this: 15,000 crores affordable. Affordable as of March 25 is 5,070 crores. March 26 it will be 9,500 crores, and March 27 it will be 15,000 crores. So out of 1 lakh crore in March 27, affordable is 15, emerging will be 25,000 crores, and the balance 60,000 will come from prime. This apart, this year, FY26, we have started a new vertical called loan against property. This also would help us on the growth and margins. And corporate, this year we will do about 1,500 crores of business. That is going to help us on margin and overall growth.
Okay, so sir, this is a new one, right, sir? Corporate that you're talking about, and could you please help us understand what kind of entities would you be lending to here, sir, and what your core focus will be on the corporate book, and also your long-term plan for this one?
So corporate book is not new to us. We had done this in the past. There was a lot of stress in the book, and therefore we had
Yes.
suspended the corporate business. We worked on NPAs, brought down NPAs to nil. It was zero even 1 year back, and even
Yes.
today it is zero. Today the corporate book is about 863 crores. So now we want to restart with a calibrated manner, and
Okay.
therefore our focus is going to be, quite low on corporate business. And by FY27 in the overall portfolio, corporate is going to be about maybe 5 to 6%.
Okay. Sir, also help me understand a bit on, say, your cost of borrowing now. How is that coming along, especially with the rate cuts now in focus? What exactly are you planning now, sir, on the borrowing front also?
So if you look at our cost of funds, it's been pretty consistent and it's been coming down every quarter.
Hmm.
So quarter four, if you see, it is a 7.84%. Previous quarter was 7.83. With policy rate cuts, this cost of borrowing will come down in next few quarters, and
Yes.
whatever benefit we get, we will pass on to the customers. And we have lot of levers to increase yield within prime, emerging, and affordable. We are trying to increase our yield, and also the share from affordable and emerging is going to be more. For example, in FY25, the overall share is 36% in disbursements, and at a book level as of March 25, it is 23%. And by FY27, this will be 40. So this is going to help us on A, growth, B, in terms of improving our margin.
Okay.
So if you look at the liability mix, we have 38% from banks, 28% deposits, NHB is 14%, and the rest is from CP and NCDs.
Okay. So help us understand, especially on the margins outlook for FY26. You were initially working with a band of 3.6 to 3.7. Now you're ending the band with a little higher than your own expectations there, sir. What exactly would you foresee for the margins going forward? Again, with the rate cut regime going in focus?
I think everything baked in margin for FY26 is going to be quite stable.
Okay.
So FY25, the guidance was 3.5. For the whole year, NIM was 3.7%, quarter four was 3.75%. So FY26, NIM is going to be stable. It will be around 3.6, 3.65.
Okay. Now help us understand, sir, a little bit on, the focus on the overall your AUM. You've crossed that, 80,000 crores mark as well. By when do we see that 1 lakh crore happening, sir? What's your internal target on that one?
No, today the AUM is 80,000 crores and the book is 75,765 crores. So I'm talking
Okay.
about the book, not the AUM. So the book is going to cross 1 lakh crore by March 27 because we are not
Okay.
selling here now, and therefore AUM, I'm not talking about AUM. That book will run down. Today it's about close to 4,500 crores. That will run down. So we have today loan book of 75,765 crore. Now this will touch 1 lakh crore in next 2 years. That's the plan.
Okay. So on the asset quality, you have industry-leading, improvement that's coming in already. Is there further scope to improve that, or is this going to be a comfortable level to be with?
No, we want to take the GNPA to less than 1%. So that's the plan. So hopefully this year we will see GNPAs going just below 1%, and we will try to maintain at that level going forward.
Okay. And your outlook for both the net interest income and net interest margin, sir, for FY27 and for FY26, sir?
So I think let's talk about FY26. FY26 margin is going to be stable. Net interest income has to inch up. So today it's at about 16%. So it will go up with the mix changing with the yields going up. Obviously, NII will improve. So we will see that improving in FY26. Our growth guidance on retail for FY26 is 18%. Corporate, we will disburse about 1,500 crores. And I've shared my vision for the company for FY27.
Okay, fair point. We'll keep that in mind again. Apart from this, I also wanted to just get a sense on the consumer durables aspect also. What's the outlook there on the loans that you have been extending now? Because why I want to ask that is because, of course, affordable housing is something that you're looking at, emerging is something you're looking at this point in time. On top of that, if you look at consumer durables, how are you going to be looking at, your books at this point?
No, we are only into mortgage. We are not into consumer durable lending. We
Okay.
don't do CD business. We do only mortgage. So within mortgage, we do home and non-home. Within home, we do various type, I think various type of loans. And within non-home, we do largely lab and loan to commercial small premises. So we focus only on mortgage. We are not into CD business.
Okay, sir. Got that for clarity. Also, on geographical guidance, if you could share with us, sir, how is the focus going to pan out in FY26?
So today, if we see as of March 25, we have 356 branches. We opened 52 branches in FY25. So FY26 and 27, FY26, the plan is to open 50 more branches. By FY27, we will get to 500 branches. So today, 356 will go to 500 by FY27. And affordable, today it is 200 branches. That will go to 300 branches by FY27. In terms of geographical mix, I think we are slightly more skewed towards south by design because south we see huge potential and the repayment culture is a notch better compared to other regions, followed by west and north. So I think we have equal share of business from south, north, and west. On east, we just got into northeast. East, we are present. We have very few branches in East. Northeast, we just opened one branch in Guwahati. That's on the affordable side. So in Northeast, we'll be expanding, from one branch to 10 branches, in this year. So that's our plan on branch expansion and geographical presence.
Okay, fantastic, sir. Thank you so much for speaking to us on Business Today Television yet again. Congratulations on those steady set of numbers that you've posted and all the best for the upcoming quarters. We'll be catching you soon on another quarterly, sir, to help us guide more on how the demand scenario in macroeconomics is shaping up. Thank you so much.
Thank you. Thank you so much.
All right, viewers, there you have it. You heard it from the top management of PNB Housing Finance, what has gone behind the strong set of numbers, where the focus is going to be for the company going forward from here. What's the outlook on the margins front as well as, how are they really looking to expand their book and geographical presence with new branches coming up too. I hope this has given you enough and more sense. I hope you continue to stay with us on Business Today Television to listen to more management conversations that actually give you a better perspective of how the companies themselves are really thinking of, what's working well for them and the outlook going forward for FY26. So stay tuned. There's a lot more for you to catch up on after this. And of course, I'll be back for the closing edition of Market Today.
The Honorable Donald John Trump. It has been a bold and aggressive Donald Trump in Oval Office for 100 days since January 20th inauguration.
United States, the office of President of the United States.
Cutting back on government agencies, initiating trade conflicts,